Hello everyone. Today is Thursday, the 26th of February, and I just wanted to go over today's trades and a lot of progress being made, actually. Couple bad trades, good trades, bad parameters, and I just wanted to make a note for myself as I'm going through these trades here so I can look back and learn from them, and maybe you can learn a thing or two if you pay attention too. Okay, welcome to the Trade Desk at Home, and we're gonna go through today's market session in review. Okay, so what do we see coming into the market? Now, as a opener, I trade futures on ES, NQ, and YM, primarily the macros, the M and Qs, the MES, and the MYM. Okay, so the Nasdaq, the S&P, and the big caps, large caps. So coming into the day, we saw a rally up on YM, and currently at the opening, I was looking at YM. It was going up, and while seeing that, I have a 15-minute split chart opened up above me on my second monitor, taking a look at all of the markets here, the MQ, YM, MNQ, YM, and the ES. So as YM was reaching higher, both ES and NQ were selling off. So it was a little strange for me to see it, but you know, it does happen. It's not, YM isn't entirely correlated, and sometimes they have opposing moves. So the main note I wanted to note for myself is that the edge works, the system works, the risk leveling works. I just have to continue executing it and continue seeing the different variations of it, and following risk, eventually the system will print. Okay, so the reason I say this is because I started off a little like kind of like a preemptive strike sort of mentality. I wanted to get a large P&L today, to be honest, and obviously that's not a good place to start. You don't want to think about P&L, but here I was. So I saw this break above here. I saw this break above the previous session highs on YM, and saw this 1 minute fair value gap. So I'm thinking, okay, so broke up out, and we have a clear liquidity target up top from sessions prior. So we could possibly hit this before continuing a reversal, even though NQ and ES are selling off. Maybe we come up here on YM and then do a reversal. So that was my thought process going in, and obviously I take this position here as it created a 1 minute fair value gap, anticipating the fair value gap would sustain the move, but as you can tell, it didn't, because the next candle, even though the first 1 minute candle within the fair value gap went up, the second candle sliced right through it. And that was my first red trade today, and kind of set me back in terms of emotions, because I was wanting a larger P&L and so on. So I was very P&L focused initially going into the markets here. But then we, you know, brain locks in after the first hit, right? So sell off back into our zone here, previous session high supply zone. And what do you notice here? Well, I got in on an entry here. You might be asking why here, because here's another fair value gap here, a bearish one. I saw price retest this, and then it started selling off. So I got in with a risk above the fair value gap, and then got stopped out, proceeded to get stopped out here. Okay, the reason this setup is quite important is because, well, we didn't see the crossing of the EMAs just yet, the 13 and 48. So momentum is still sideways, and it could have definitely come in here, retested the zone, and then continued back higher. Definitely a possibility. But this is where a lot of the learning is happening now, because I see myself getting stopped out. It's like, all right, 2 trades, should be done for the day. But then wouldn't you know it? It doesn't close properly above it. It doesn't show good displacement like it's using the 1 minute fair value gap. It's not invalidated yet. And then we continue lower. This is when the emotions kick in, because I'm thinking I am right, but now I'm missing my move. I got stopped out before going in. So this second trade here on MYM is essentially the same thesis going in. Okay, we're going short to this low right here, which eventually you see market does take that low, and I paper handed right here. I paper handed this so bad, and because the first two initial losses caused me to do paper hand, because I was risking more money on this as well. So a lot of emotions regarding PNL this session here, but eventually it does go, because this initial fair value gap from pre-market holds and inverses, so that's also a good sign. Bearish fair value gaps going into it is being respected, rejecting, and now we have bearish EMA confirmation, and price just kind of rides the EMAs down, as you can see. And then this part really broke down, so I close it out here because I already took like a pretty good hefty loss over here. Didn't want to risk this going forward. And the next trade was on M&Q, and again it was the same repetitive behavior where it broke down. I got in preemptively on this break, and I set my stop loss over here, and I increased my risk actually. So this is my stop loss, and I was thinking maybe I set my stop loss here, but this was already such like a risk after the losses. I didn't want to take more of it. What if it goes all the way up here and passes, you know? So with that in mind, I didn't move my stop loss, but then again I get stopped out. This was a better stop loss target, and I knew that, but I was hesitant on doing it because I was putting on too much risk. And then it just went right. Every bearish respected. Here's a doji, right? A clear indication. When you see dojis, or at least when I see dojis at these key fair value gaps or my zones, or even at the EMA, that's a very clear indication that price will continue the trend backwards. And then you also have this 3-bar flag right here that also broke with the doji. So everything was really clear, right? And the only thing here is that it's the same pattern of putting on too much risk, preemptively getting in instead of waiting for like an entry right here, and not putting on proper stop loss. So a lot of hesitancy, and again, all of this comes from PNL focused trading, where you're not trading the chart, you're trading your emotions, you're trading the money, and that always screws with you, right? Because my initial target, as you can see, it's a 3.12R. I could have done this really nice 2.3R, nothing wrong with that, but I was thinking, you know, maybe if it starts going, then it'll probably keep going. At a moment I was thinking maybe it comes down all the way here if we can get a break, but with so much emotions going on, I was hesitant on taking more losses, especially when you get stopped out and then the market starts moving. It's the worst thing. It's the most beautiful thing, but it's also the worst thing emotionally if you don't understand what's happening. So it's the most beautiful thing because it shows you that you are correct on the thesis of your trade. You have to focus on a better entry model, better entry criteria, and better entry confirmations with proper risk, right? So it is a step forward, right? Too many people, I think, early on in their trading career focus too much on entries, where to enter, where to get in, but not you're building out your thesis, right? My thesis was that here's a zone, here's my overnight low zone up here. This blue one has been slammed through. This demand zone has been cooked. It came back up, rejected it, been cooked. The EMAs are supporting price down, right? 15-minute closure below here, right? If we go to 15 minutes, let's see what the market did, right? Complete wick, came back up, closed over here, continued down, right? So huge sell-off, and then rejected all the way from up here. And again, it could have reversed here for sure because the 50-minute didn't properly close down. But at the same time, if that was the case, we would have been able to see it here, right? We would have been able to see the reversal happening here. But what the price action showed us here was, here's your 3-bar flag, right? And then it started breaking down. Never closed above the 13 EMA. It wicks, but always fails, right? And near my entry, you see the 1 minute bearish fair value gap. All of them are being respected, right? especially this one on my entry criteria. I got in a little too early because of FOMO and things like that, because again, P&L trading. But if I just stuck it out like this, would have worked out just fine. Followed my risk parameters instead of risking more money. Really waited for the setup to play out instead of taking those early trades, early P&L driven trades before. I would have been just fine. And you see this bearish FEG playing out as well, being respected, wicked, and then went. These two stacked fair value gaps also respected, and then we just broke down after this, right? Here's a little bigger of a flag here, more of a pendant down here. But yeah, I mean, very clear, and like the beauty of it is that I know what I'm looking at, but the P&L got in the way, and I'm really training myself to have better entries. The flags are really beautiful to look at, and getting in on the FVGs are very, very crucial instead of FOMOing in. But you can't risk the stop loss placement. You really can't do that, because then you get stopped out, get more emotional. Oh, I was right. It feels like you're being cheated out of the position, right? The other trade that I took really played out really well. Same thesis, again, same trading system. And as you can see, this is on ES. ES actually played its levels a lot better, in my opinion, as it always does compared to NASDAQ. NASDAQ is really wicky, right? So you'll have wicks, but then the body will confirm the levels. But it's the wicks that do the damage, right? So as I'm frustrated with these setups that basically got away from me, I took another position, and this time it was on ES. So as ES is breaking down prior day low, I see the flag forming, I see the flag break, I see the 1 minute fair value gap it's in, and it's in the zone, all of the three indices. And then finally we come to my final trade, which is on ES, and ES actually follows the system way better. It follows supply and demand levels way better, critical liquidity levels way better, and just overall a better chart, in my opinion. Maybe I should just focus more on ES. But ultimately, when I go over all of the trades, you'll notice that all of them fairly play out pretty good most of the time. And the trades are still there. The trades are very much there. It's just that the execution and the stop loss placement along with the risk is what's causing so much grief. So here I really tried to lock in here. I saw it go down. I saw this flag forming up into the zone, into our prior day low zone, along with a fair value gap. So it doesn't fully break out of the fair value gap in a strong fashion, and every time it broke out and then I saw it come back down, close below the uptrend, the flag here. The moment I saw the flag break, I entered in, and honestly my actual risk should have been up here on this one. This is where my risk should have been. Okay, but again, because of sizing, and I did size better on this one, following my risk parameters a lot more closely instead of like risking $500, for example, $400. So this one risk was $210, so right around what I like to risk, 100 to 200 bucks. Mind you, the other ones were like $400 losses, $300, right? So they kind of escalated, but then I sized down here, and wouldn't you know it, look, it smashed through our target. My ultimate target was actually down here, overnight high right here, and obviously it would have played out. 10-hour position, god damn, I try not to look at this. Looking at what could have been only causes more pain. But my initial target was just right down here, 2.48, the 15-minute fair value gap bottom. So this was basically a gap fill target, filled the fair value gap. And again, just the losses, and it really messes with your mentality, makes you question everything. But now that I look back on it, you know, the system plays time and time again, and as I'm building and continuing to refine my edge, I see more and more ways to improve. So let's get on to improvement. So number one improvement is follow risk, right? Follow your leveling plan. My leveling plan is honestly even less than 200, so I want to risk 155, hopefully 1 to 2 trades and be done with it, right? And proper risk placement, right? I can't be having arbitrary, like very tight risk above these candles here and blah blah blah. Like that's not gonna, there's no guarantee you're not gonna get stopped out, right? You should actually have swing high points or low points or above a zone, right? So it's either this one or this one is valid. I will not consider this valid, but it's hard to place your stop like this, for example, and look at a 1.3 and you're like, well, it's just a 1.3. But then ultimately the beauty of trading is you have a 2.8, but you could have easily gotten stopped out, right, with a better risk. So this is still 2.8. It's not bad, but then I was around this mark. I almost got stopped out, as you can tell, but then formed into a doji, which is the other criteria, which is proper entries, right? I think my gauge on the market is very good with my supply and demand zones, the 15-minute closing, 15-minute candle volatility and momentum and everything like that. I can gauge the market fairly well. It's just that I need to focus on my entry instead of getting down right here, or aggressive entries or not, safe entries. You know, I really gotta continue focusing on aggressive versus safe entries and proper risk management, following the flag. If you see a flag, it's a great way to enter. If you see a doji, it's a really good sign. If you see a doji at a key level, very good sign. And this one eventually printed, right? I exited actually not just here. I let it run for a bit. I exited somewhere around here, and then it kept going. But I was happy. I learned a lot, and I was finally able to see all the things I could improve on because I know my edge in my system, right? For the longest time, it's very confusing to try to improve when you don't even know what to improve on. So when you don't have an edge clearly defined, it's very hard to know what's going on. You feel really confused. So I'm glad that I'm able to see very clearly, oh, I could have done this better, right? The system plays out. There's no confidence issues on like, oh, does the system work? Does it not work? I finally came out of that, so that's pretty good. So going forward, these few things have to be put in place, and honestly, just keep executing. The more you execute, the better you'll get. And I hope you guys caught some shorts. It was really nice all the way down, all the way back, right at our zone, and then bounced right at our zone all the way back up, right? And kind of just went up and down here. Big move. And honestly, capitalizing on these moves are not as hard as I think it is, right? If you can remove the money out of the picture, right? Have proper stop loss placement, proper risk management, you know, you'll print money, right? No point in having a high risk to reward if you get stopped out versus like a 1-to-1 even, but at least that 1-to-1 has a higher probability of hitting, right? And the other thing was some of the mistakes. Besides that was the first mistake on YM. So when I went long, and as you can see, market did not go long. So YM went long here, even though I knew the 15-minute did not close above my zone, right? And when this is why waiting for a 15-minute confirmation at a supply zone is very important, because you don't know if it's gonna fail to close. It's gonna sweep your liquidity level, previous session high, and then it's going to not close above your zone, which is a clear indication of a reversal, and then it actually reversed on you. Wow, it's almost like it swept liquidity and then went the other way. Fantastic. So that's pretty much it. If you guys learned something, go ahead and like and put down a comment, and I hope you guys have very good trading days ahead. For me though, it's the end of the month. I'm not trading tomorrow. It is the 26th of February, and I've taken this 100k funded account all the way up to, where is it? All the way up to a profit of basically 2,500. Around here is when I really started solidifying my entry and exit and my edge really properly. So I was very okay with these kind of like, you know, 65, 40, and then I really started locking in. Yesterday was a bit of a tilt. Today as well, but I was still able to see my edge play out. So I now have to continue refining and simply continuing to follow my edge. And the only way you build confidence is by continually executing on it. These days, so the 18th, 12, and 11, I would say it was more of a haphazard execution on my edge when I fully didn't refine everything. But these 3 days gave me enough insight to start refining an entry and exit properly, when to get in, which direction to go in, a lot better with my supply and demand strategy. And on 19 and 20 I tested it, on 23, 24, all the way up to now, besides today and yesterday's bit of a tilt session. Now I can see it, and I simply now have to fully commit to the execution of it. But regardless, at the end of the day, it is a profitable month, and I am very happy about that. And as long as I follow my risk management, my entry model, it should be perfectly fine. So the first one was an X. It didn't follow any playbook. 50-minute did not close. The other ones followed my system. And we're going to continue to reduce the number of trades, have a really good risk to reward, proper based on structure, based on setup, follow my risk like $155, and then whatever I get out of a 2-hour target, that's what I'll get, and be happy with that. And then continue next month to refinely execute on better entry and acknowledging a better risk placement. So better entries and better risk. But now that I know the setups, and now that I know, the flags, the 15-minute, how it reacts, and how kind of like the market comes up and pulls back, and really just sitting with it, right? It was very hard for me to sit through all of this ups and downs, because I'm not super used to it, not yet, right? But my system demands that you be used to it, right? Come down here, here's a very clear, and obviously in hindsight you see it, right? Oh, it's delivering out of this 1 minute fair value gap, it's rejecting it, rejected it again, rejected a third time. So you could have gotten in right here, right? This could have been the better play. The moment I saw this rejection, it came back down, right? Could have entered here, could have entered here, right? With a better risk to reward, the better loss, stop loss up there into this 1 minute fair value gap if it was to be contended, and then actually have a good target like the low of the zone. There you go, 2.7, right? And then it played out. Yeah, it went lower, but like the point is your setup played out. You could have even targeted the prior day opening, prior day close. So the gap, prior day closing gap, and that's a 3.14R, and that's pretty much it. And really sitting through all these ups and downs and knee-jerk motions, like you're going down, and then all of a sudden, when you see something like this, right? You're like, oh, this is the reversal, guys. So just going through experiencing all of that is gonna help. And then there's no way around pain, there's no way around anxieties, there's no shortcut around experience. You have to actually go through it. So that is all. I hope you guys take care, and I hope you have a profitable next month.